All right, Scott Simpkins, my HELOC tutor, no cost education initiative. This is video number 25. So, going back to video 24, that one was entitled The Perfect Storm Meets the Perfect Tools, and effectively began kind of a new chapter for my HELOC tutor. This new chapter is about not only eliminating debt, but simultaneously building tax and risk-free wealth. Video number 25 is entitled Financial Synergy, and it unveils the synergy of combining the two perfect tools, the HELOC and the highly structured whole life policy. And from this point on in the video, I'll just refer to that as the structured policy. You know, synergy is a powerful force. We talked about it a little bit with the example in video number 24. The two borax mules that together pulled fully 50% more than their individual sums. Now, to track best with video number 25, I think it's going to be a good idea to do a quick review of the three videos and actually one definition link down in the description below. And if you speed these up a little bit, the My HELOC Tutor videos 1 through 9 will take you about 14 minutes. The Wealth United video will take you roughly 9 minutes. And then that third video is about corporations, banks, and the wealthy using these structured policies to create mounds of tax-free cash. So try to watch at least 5 minutes of that video. The gentleman's name is Steve Parisi. The definition link is for the acronym COLI, C-O-L-I, which stands for Company-Owned Life Insurance. Take a look at that. You'll see plenty of proof of the tax-free aspect and why these companies and corporations use the tool. Now, regarding Mr. Parisi, I want to say a little bit more about him by way of my good friend Kevin. For years, Kevin's talked about the question, do you really need to understand the binary functions or inner workings of a Coke machine before you get a soda out of it? Or do you just kind of need to know where to put your money in and know that the soda is going to come out the bottom? In the same way, are you going to sit in a dark room and refuse to flip the light switch on because you can't explain light bulbs and electricity, or are you going to sit at home because you can't explain how your car engine works? Same kind of thing. Of course, you're not going to do that. You just need to know and have confidence that the tools are going to work. And, in reality, how a tool works, it's not even important until a person is interested in what the tool is going to do for them. And in our case, the goal is to eliminate debt and produce tax-free cash. So until you decide you're interested in those things, who cares how the tool works? Now, for most people, knowing that a tool is going to produce a desired result, that's sufficient for them. If, on the other hand, you really want to know about the binary functions of the structured policy, I would suggest subscribing to Mr. Parisi's channel. He's very good at explaining. He's extremely knowledgeable about those inner workings of these policies. All right, again, those three links are below. So now, individually, the HELOC and the structured life policy are already very powerful, but when they're combined, they're going to create financial synergy. And in the 10-minute Wealth United video, there's a few key points I want you to listen out for. At the 30-second mark, you're going to hear how debt is big business and that it's intentional. It's intentionally set up against us, and that the less we know about it, the more money the big institutions are going to make off of us. So between my HELOC tutor and Wealth United, we're going to try to change that with a different mindset about these tools. Also, at about the 5 minute 20-second mark in the Wealth United video, it's going to tell you where the money in your household is going to come from that will make that structured policy work. So be on the lookout for that and start to get an idea for yourself. And this is, again, without changing lifestyle. Now, in the Wealth United video, we meet Tom and Frank. And as you recall, they have the same financial numbers: debts, payments, income, standard payoff. They're on a 24-year pace to be debt-free. We'll call that 0 day. Frank, as you saw, he's stubborn. He stayed on the 24-year path, doesn't want to do anything different. While Tom said, you know what, this Wealth United thing seems to make sense, I'm going to do it. And his payoff date, his 0 day, turned into 8.7 years. And then Tom can get really aggressive on building further wealth for his family, tax-free. Now, in those scenarios, Tom and Frank, neither one of those guys used the HELOC. Tom used one of the perfect tools, which was a structured policy. What video number 25 is now going to show is the synergy of incorporating the HELOC and the structured policy together, because remember, they both work better when they're used together. So now let's introduce Noah and Max HELOC. They're twins, and like Tom and Frank, they both have the same exact financial numbers, debts, payments, and income, all of that stuff. So I'm going to jump over here and show you a little bit of their profile. Bear with me. Here's the customer profile. Male, preferred, non-tobacco, date of birth, June of 75, so they're 46 years old. Got a credit card balance there, interest rate, payment, car one, balance, payment rate, has a home that they owe $250K on, valued at $375,000. Okay, so what happens next is Noah, they both are going to use the wealth building tool. Let me flip back down here. They're both going to use a wealth building tool, but Noah just uses the policy. His payoff date becomes 10.1 years. Let me flip back to that for you. Noah uses the structured policy. His payoff becomes 10.1 years. Max, on the other hand, creates the synergy, incorporates using his home equity line of credit, which has effectively been used. He takes a chunk from his HELOC, runs it into his policy, gets a chunk of cash that's in the policy, but then pulls those funds out, and it can be done all at one time or over a quick period of time to pay off these things. When he does that, it gets rid of the associated payment to his banking institution and makes things run far more efficiently inside of this engine. Okay, so that's the basics of what's going on here. Now, Max went down to 7.7 years. Noah went down to 10.1 years. Okay, now an odd thing is that some people may not be able to do a HELOC. Somebody may not even have a house, so they certainly can't do a HELOC. But if you could go down to a 10.1 year payoff like Noah did, would you not want to at least do that? Of course. So there's no delaying. If it makes sense, you do it. But if you're a Max and you have a home and you can incorporate the HELOC, and we'll help you understand how that's possible and what the equity is and how that would work out, that's another 2.5 years. Talk about synergy. And because Max's policy was initially designed with the HELOC in mind for using it, he will also have way more tax-free cash at the 5-year mark, 10-year mark, and way more face amount or death benefit for his family and their legacy going forward. Now, remember, this system, I mentioned it a little bit in video number 24, doing this system doesn't involve buying some $3,000+ software system. Do yourself a financial favor. Lean in, fill out the form on that Wealth United video. We will help you then figure out if you can combine the power of both of these perfect tools. Again, maybe the HELOC isn't possible immediately. That's okay. Like I said, if you can get down to 10.1 years or get on pace for that, do it. But if you're Max and you can integrate the HELOC right away, then we're going to help you see how to do that as well. Now, one closing thought that I'm going to give you. Once a person understands, a person or a couple, when they understand how to use their money through these tools with the HELOC, with the structured policy, they understand the nature of how to do this. And that payoff date will actually become less and less important, because they will, after they've learned how to use these tools, they're going to see more ways to use the tools, and they'll be willing to dip back into those tools for leverage. That's another powerful term that's going to find its way into future videos. Again, thank you for attention. Like, subscribe, and share. Thanks again.